All right, guys. So how I would like to start off this video is talking about the difference between the employer and the employee. So as an employee, we all must pay, as an employee, we all must pay like federal, we almost federal income taxes. We must pay state if you have a state that's that has state income tax, right? Income tax. Um, we also must pay, no matter where we are, FICA, right? So FICA, remember, is divided into two things. You have social security, social security, and then the other one is Medicare. Okay, so at a minimum, we're all at least, or if you're not in California taking this class, maybe you're probably paying at least minimum three, which is the federal income tax and FICA, right? All right. But remember, unless you work for yourself, it's likely that the employer is withholding this for you, right? They're withholding it on your behalf. Now, the employer they have their own taxes as well. They must pay FICA, which is the exact thing that you're paying. They must equal. And they must also pay FUTA, which is the federal unemployment, and they must pay SUTA, which is the state unemployment. So in the event you get fired, you can file for unemployment, right? But just as a reminder that if you get fired for due cause, like stealing or showing up late or being insubordinate, that is a legitimate reason, and therefore you cannot file for unemployment. They have justified their reasons. Okay, neither here nor there, but just want to let you know. All right, so now what we're going to talk about is going through the example. So hopefully you're following along with the demonstration, the examples that I have posted. And so what I'm going to do now is I'm going to share my screen, and we're going to go through this example together, and I'm going to show you maybe a little trick of how I can remember what goes where, because there is a lot of moving pieces when you're trying to record a period's or a company's payroll. Their payroll. All right. So here's part one. It says the payroll register of Heritage Co. indicates $39 of Social Security withheld and $975 of Medicare tax withheld on a total salaries of $65,000 for the period. Federal withholding for the period equals $14,250. The retirement savings withheld for the employer's paycheck is $2,600 for the period. All right, so that's a lot, right? So how do you compose this? Because there's a lot of missing pieces. Now, I promised you in the last video that I would show you my tips and tricks. So here it is. So when I am coming up with a journal entry to do this, I like to put it in the format of this. Gross pay is my debit, and my credits to follow, right? All of these are credits. Everything under here is credits, is all of your deductions. Okay, so that deduction could be the federal income tax, that could be FICA, which is split out into Social Security and Medicare. It could be all of your retirement, right? All of these are credits. And then your very last entry, it is a credit as well. Your very last entry is going to be salaries payable. And that last entry is going to be a credit, as I mentioned. But this very last entry I like to think of is as net pay. So remember, it's going to follow the same format as our when trying to figure out net pay. It's gross pay less your deductions, and then the ending is your net pay. Okay. If I'm doing a journal entry, this is my debit. All of my deductions are my credit, and the very last line is going to be a credit that shows me, difference between net pay. So let's put this to work. Let's see if this really holds up to what I'm really speaking of, and then you can call me out if not, okay? All right, so let's do this. All right, so we're going to start off with, as I mentioned, the very first one, which is our salaries. Okay, so it tells us that our total salaries is 65,000. Now it doesn't split it up like our prior example into maybe sales salaries or office salaries. So we're going to just put our debit as salaries expense. Okay, that is my gross pay off the jump, right? So that is going to be 65,000. Now from here, I'm going to do all credits from here, right? Because that's my bigger lump, and now I have to do all of my deductions, and then my total is net pay, equals net pay. So now I'm going to start doing my deductions. So my first deduction, they tell me, is for Social Security. So it's going to be, my credit is going to be for Social Security tax payable, Social Security tax, and everything is going to have a payable next to it because it's not due right away. All right, so then that amount is going to be 3,900. All right, then our next one we have is Medicare tax. Okay, so this one is going to be called Medicare tax payable. So here we are, Medicare tax payable. And again, it tells us it is 975. All right, next. We got that. So it told us that our federal withholding for the period is 14,250. Okay, so we're gonna call that one employee federal income tax payable. Okay, so employee federal income. Sorry, I can't spell. All right, sorry. Federal, employee federal, what is it called again? Employee federal income tax payable, income tax payable. And that one is again 14,250, another deduction. Okay, I need to just kind of push that out. Okay, all right, next one we have, so we got this one done, we got this one done, we got this one done, we got this one. All right, so then the next one we have is the very last one, which is retirement, right? And so maybe that's going into like a 401k or a Roth or a something like that, whatever. So then this one is going to be retirement contribution payable. And then they tell us that they're saving $2,600. Okay. All right. So now what we have is we have gross pay, right? The gross pay amount for our employees is 65,000. Come on. 65,000. And then we're going to subtract out all of our deductions. So the first one is Social Security tax, which is less than 3,900. Then we're going to subtract out our Medicare, which is 975. Then we're going to subtract out our federal income tax, which is 14,250. And then lastly, we're going to subtract our retirement contribution, which is 2,600. Remember, all of this is the employer withholding this from the employee's check on their behalf, right? So the employer the employee is paying for Social Security, Medicare, their federal income tax, and retirement. They're doing this because the government has realized that if the employer does not withhold it, the employee will likely get into trouble and will not be able to pay it. So they trying to prevent you from going to jail or tax it. Okay, leaving that alone. All right, so then my very last line, as mentioned before, is going to be my net pay amount. So my net pay amount, or also known as salaries payable. And my salaries payable amount is my gross pay less all of these deductions equals 43,275. And this is my journal entry. So gross pay less my deductions equal net pay. Okay. All right. So moving on, I am going to now move on to my part 2, and I am going to now capture my payroll tax expense. So give me a second. I am going to scoot. Okay, so here I am. So it says the payroll register for a heritage company is $3,900 for Social Security withheld and $975 of Medicare tax withheld, for total salaries of $65,000 for the period. Earnings of 10,000 are subject to state and federal unemployment taxes 8% and state 5.4%. All right, so the way we're going to capture this is, remember, the employee has to pay taxes, so that's what we captured in part one. Part two is the employer, the business, they're paying their part, their share of their taxes, okay? So the way we're going to start off this, unfortunately, there's no pretty way of doing this. So here's how we're going to start off with. The debit is going to be to payroll tax expense. So right now, I do not know what this amount is. I'm going to add it all up, but what I know, that is my debit. Now, everything to follow is a credit. So I'm going to start listing those. So it tells me that my Social Security tax payable is the $3,900. Now, that's not surprising because, again, that's what was paid by the employee here, right? And we know that these two amounts must match. If the employee paid $3,900 in Social Security and Medicare tax $975, we must also pay our portion because they must match. Okay. So anyways, so that's $3,900, and it tells us that the Social Security, okay, and then our Medicare tax. So Medicare tax payable is $975. All right, so now we got to deal with basically FUTA and SUTA. And so FUTA, let's tackle SUTA first. So we need to do the state unemployment tax payable. So that's what it's called, state unemployment tax payable. All right, so let's see how we're going to calculate this. So it says earnings of $10,000 are subject to state and federal unemployment at the federal rate of 0.8% and the state rate of 5.4%. So we're going to take this $10,000 that is subject to taxes and multiply it times our state rate of 5.4%. So it's going to be times 0.054%. So if we did that calculation, 10,000 times 0.054%, that comes out to $540. All right. And we're going to do the same thing for our federal unemployment tax payable. I'm running out of space. Sorry, guys. All right, so that one's at 8.8%. So that's going to be $10,000 times, now 0.8%, that one is 0.008, right? So that's how we do that one. So it's 10,000 times 0.008, and that comes out to $80. Okay, so that what goes here. Okay. All right, so now we are able to come up with our payroll tax expense. We know that from the very beginning that our debits must equal our credits. So we have a whole bunch of credits right here, and now we need a debit to equal it out. And so even though, again, we didn't know how much our payroll tax expense was, now that we have recorded all of our payroll taxes, now we're going to add them all up. So we're going to add up the $3,900 plus the $975 plus our $540 in state unemployment plus our $80 in FUTA, or the federal unemployment, and that amount comes out to $5,495. Okay. And that is all. I know I can't say that was super easy. I'm not going to even say that, but that is how you go about figuring out how to record both the payroll, the period's payroll expense, and also what the employer is responsible for in regards to their own taxes. Okay. So hopefully that made sense to you. If not, let me know, and then we can set up some one-on-one time.